Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Thursday, the 19th of July. Starting off with Anglo African, where you can see there's been a decent bounce off the main support area between, 9 and 10 pence. Nice break of the 50-day moving average, basically first time lucky there after a little jiggle. And heading towards the 200-day line at 12 pence, filling that gap as well. Down from May, end of day close or end of week close, depending on your taste, above the 200-day line. Could target as high as 19 or 20 pence over the following month or so. Stop loss here, well, probably back below 10 pence is enough of a risk. Hopefully it won't go back below even 11 given recent price action. Following up on Angus Energy, which I interviewed a few days ago, the guess here was obviously that 5 pence would be the main support area. We had a higher low for July versus June. June basically a bear trap below 5 pence, and end of day close today back above the 50-day moving average at around 6.25 pence. Should take us up to that resistance area, recent resistance area, 7.5 to 8 pence. But a break of 8 pence is really what we're looking for to fire up the stock towards the previous target here around 11 pence and the 200-day moving average. Going on to stock which I liked a little while back, which had a bit of a break. Maybe it's having another break now, but Eqtec broke the 50-day moving average at the end of May and stayed above it, has stayed above it ever since, which is normally a very bullish sign. Breaking above a penny, very encouraging yesterday, and really while we hold above the bottom of this May trend channel, March trend channel rather, at 0.8 pence. The target here still as high as 1.8 pence at the top of the 2018 feature there. Feedback, a stock which I don't normally look at, but seems to be looking interesting at the moment. Very strong candle today after yesterday's one touch of the 200-day moving average at 1.96 pence. Breaking above the 50-day average as well. All we need to see now really is a break of this resistance line from April at 2.6 pence to give us, to open up the prospect of a target up as high as 5.5 pence over the following month. Obviously back below the 200-day line is currently the favoured stop loss there. Stock which is new to the recent version of the Bulletin Board Heroes, comes in the form of Jubilee Metals, but as you know, with this incarnation of BBH, we've been great fans of the falling wedge and the falling wedge breakout, and it looks as though that's what we've got here at Jubilee Metals, just starting today. So breaking 2.35 basically breaks the wedge, and above that, but initial target here around 2.8 pence. Let's see if we can get some decent follow through. Stop loss obviously back below 2.2 pence, which seems to be reasonably good risk reward at the moment. Live Company is a company that I interviewed few weeks back. I think the shares were around 45 pence then. They've now hit up to 80 pence. We obviously wouldn't take any credit at all, but the chart looked very good at the time with the break above the 50-day moving average, and we basically stayed above that feature, the blue line there at 45 now, ever since. View at this stage is really while we're above 60 to 65 pence, we could still get up to our previously estimated target as high as 95 or 100 pence, which would be the top of the 2018 price channel. Onto a stock which is another, from memory, is another falling wedge breakout. This one looking very encouraging indeed. New oil and gas. We had the break last week or so, breaking 0.8 pence. Made nice little bull flag here ever since, capped by the 50-day moving average at 0.93 pence. Just need to get an end of day or end of week close above that 50-day moving average to encourage us to revisit our target of 1.2 to 1.3 pence over the next month or so. Stop loss back below 0.8, so a decent risk reward situation and a very good looking setup there at New Oil and Gas. Stock which was mentioned to me earlier in the week, which I didn't follow up, but now is the time to do so. Okyo Pharma, which just breaking the 50-day moving average, sorry, the 200-day moving average at the moment at 2.47 pence. Above that, we're looking for a 4 to 4.5 pence target. Stop loss at this stage, probably the nearest you could have is back below 2 pence, but obviously this doesn't look like the most liquid stock in town, so a bit fidgety on that front. Normally don't look at stocks when they don't have much historical data, but in the case of Rockfire, it looks encouraging enough to at least attempt to come up with some technical analysis magic. We had the strong move to the upside going into the start of this month, bit of consolidation since, and the view here is that a break, well, what we're looking for here is a break of 2.2 pence, this resistance line from the beginning of the month. If we can break that, we could get a new stage to the upside as high as 4 pence. Stop loss relatively convenient around 1.8 pence or just below that figure. So might be watching that one if you're looking for a bit of fun on the trading side. Stock which I wish I'd covered before because I was rather put off by the fundamentals or people going on and on about the fundamentals. That's in a positive way, obviously. Sosandar here, just an absolutely fantastic looking chart. The break above the 50-day moving average in May was exemplary. Never went back below that afterwards. Pretty clean break of the 200-day moving average. I suppose 20 pence was the big level to break here for the stock, and so we are well up on that at the moment. We had a gap to the upside which remains unfilled, so this looks like a new breakout here which could take the shares as high as 50 pence at the top of a broadening triangle from the middle of 2016. Only back below really 25 pence would even begin to question the ultra bull argument on the stock. Interviewed UK oil and gas yesterday at the close, and the interview seems to have gone down quite well. We have a situation here where we had the support coming in for the stock after that spike at the beginning of the month, 1.8 to 2 pence. We remained above this support line here from last month around 2.3, what's that, 2.3, 2.25, oh sorry, 2.2 pence rather. And while we hold above 2.2 pence, the big target here is high as 3.5 or even 4 pence at the top of the May channel. If you're cautious on the shares, maybe wait to see how the stock behaves at the 200-day line at 2.75 pence first. That's it for me. More updates at the same time tomorrow.